Since 1971, we've only ever seen this happen 2 times. The Dow Jones was up and the Nasdaq was down over 2%. But what does it mean for us as traders and investors? And what does the data show happens next? In today's video, we take a look at that along with why we shouldn't be paying attention to the news right now. We already expected semis to fall down and they're getting closer and closer to the important mean reversion cycle. So is this all just part of the plan of Wall Street? Well, the big dark pool activity certainly points towards that. And in today's video, we talk about why the breadth thrust is still absolutely in play for the bulls when you look at the data. Also, where are the best areas in the markets right now? Well, there's been some good breakouts over the last 24 hours, and they're not all bearish. Let's look into stocks, commodities, and cryptos around the world together right now. It's going to be a good one. I'll see you soon, guys. Well, welcome back everyone to The Daily Show. It's great to have you here. My name's Tom. Today we're discussing everything from the macro to the data and what we need to know about markets. And really, we kind of expected weakness in semiconductor markets. Of course, news from the Republican side ended up causing some big sell-offs, including AMD and NVDA. But really, it was likely to happen anyway. And we've been talking about how there needed to be a pullback in time on these stocks for quite some period. Now, was it all bad? Well, you can see here on the chart, it wasn't, because we still have pretty good breadth across the markets. And in today's video, we'll go through why that's so important to Wall Street. If it's your first time here, welcome. Remember to subscribe, smash that bell icon. But let's get into the first story, which is, of course, some very interesting data here from Jason Gottfried over on X. And he says the Nasdaq Composite closed down a little more than 2% on the session, while the Dow Jones Industrials jumped to a new high. Since the 1971 comp inception, this has only ever happened twice. In 1999, funnily enough, which of course was exactly in the dot-com bubble, and then also in July of 2023, which ended up being pretty much where we are right now, being at this recorded around the 17th or 18th, depending on where you are in the world. And that caused, of course, the sell-off of last year. Now, in both cases, it fell more than 5% in the next couple of months. So could we be looking at a more significant sell-off in the Nasdaq? Well, if you've been watching the channel this week, we did expect a sell-off in the Nasdaq and a rotation into the Russell 2000 and other stocks, because guess what? It's happened this week 6 times in a row, and 26 of the last 42 over history. The first 2 weeks of the July period tend to be the best, and then the next 2 weeks tend to digest it. And when you're in an OPEX week, such as we are right now, there's a lot at stake in the options market. So we'll look at that a little bit later on. So is it all bad? Well, while we do see some weakness across this period of time, we know that the next couple of months are the most important. We always expect volatility to rise in election years, and usually it's getting earlier and earlier. July, August, September tend to be the months that you want to be paying attention to. And remember, the stats go that 2 times a year we tend to see pullbacks, and those pullbacks be between 5 and 10%, especially when we have such bullish thrusts across everything going on right now. And speaking of that, yeah, we need to talk about these bullish thrusts, because a lot of people misinterpret what it means. They think, well, we see a thrust, that means it's all good times ahead. Generally, whenever you get one of these really strong reads, you actually see a little bit of weakness initially. And in fact, you can see on this chart some of the previous times where we've had really strong reads that have ended up leading into bullish action, and there's been some pullbacks that have gone through. Percentage of S&P 500 stocks at 20-day highs went through the 55% market. We know, of course, that in general, everything started to improve, and we got what we call the Whaley breadth thrust. Now, this is the third Whaley breadth thrust that we've had, I think, in the last 12 months. And while that's already incredibly rare, it does tend to be a very good ongoing bull signal for buying the dips. And we did look at the stats, and of course, it also showed us that the next couple of weeks can get a little shaky. 5-day and 10-day stats look very different to 21 and of course 252-day stats, which is incredible at 100% win poll rate and 24% median return. If you're in it for at least the next 12 months of this late cycle investing, and this is late cycle investing, it's all becoming very clear in front of our eyes, then it may be still a good period of time for the markets. But what happens next? Well, that's why hopefully you're subscribing to the channel and watching, because I believe the next 12 to 18 months is going to be one of the most important pivotal points in not only wealth generation, but also probably the end of this major cycle that we're in. So let's talk about the 70 thrust, another great breadth indicator, again, giving us good stats, but showing the next kind of couple of weeks could be a little bit weird coming into this earnings season. Now, with earnings season kicking off, we know we have TSM and Netflix, and TSM will be the big one because it fell over 7% overnight, and basically we just saw also its earnings about to come out. So we know that earnings is coming out. It's gone up 40 something percent coming into that earnings, and it needs to give up some expectations that are going to be big. And of course, it's the first major semiconductor to do it. Now, the market is doing a breadth rotation. Why? Well, the expectation of rate cuts. We've now, according to this chart here from Mike Zaccardi over on X, we've got, I believe it is 64 basis point cuts into the year priced into the market. And of course, the smaller cap stocks are really going ballistic off this. And we're seeing huge upticks across the board, including a movement here from into the 12s just at the beginning of, or the late end of 2024, from small and mid caps to now sitting at around 16.5. Is this still low? Well, you be the judge of that. It's still well under where we could get to. So if we do end up seeing these rate cuts, what might do well leading into them? Well, small caps could. And of course, 20 would be one of those targets that you would have to maybe start scaling back your long-term investments. Why? Well, it's something that we've hit many, many times before. It's unlikely we'll hit a 30 again, especially on the small caps. And 20 is already starting to get a standard deviation above. And this is one of the favorite things that we like to do here on the channel. We like to look at what the averages are and think about it as not so much as like everyone feeling FOMO or fear, but instead, does it make sense for this market to be, one standard deviation away from where it currently usually would sit? And of course, that is one of the problems that many people are having with this current AI market. It is quite overbought, but of course, that is its own thing. It's a bubble, and each bubble must be bigger than the last one. And as we saw the other day, we've now entered that territory. We're now in the biggest bubble of all time. And while I still think it'll continue for a bit and become for the history books, they always tend to end in a very certain way. And I'm pretty sure we'll end up seeing that over the next couple of years. Let's move over to Thursday now. TSM, as we said in the before market, this will be important. And then Netflix aftermarket, which is the most important first tech stock in the US. And will that do well? It's at that all-time high. TSM's gone up 40%. And really, it's going to be one I think that you'll want to be looking at after the fact for both of them and having the patience to react to the environment a bit more. Netflix in particular is going to move plus minus 9%, and TSM is going to move around plus minus 8%, though that could get even bigger with the eventuation of what just happened over the news. So do we expect the VIX to continue to potentially get up, down, and all around? Yes, the term structure is suggesting that volatility is going to spike to its highest based on October, although that may have changed since this report came out because, of course, of the events of last weekend. So we'll continue to watch this one, but we do expect volatility to be back. And for the first time in a long time, we just had a 1% plus sell-off on the S&P. So really, it's been a while since that's happened, and it marks the beginning, I think, of volatility. So where are some good places to hide and go to? Well, one of the things we've loved on the channel together has been gold. And of course, a 14-year breakout on junior miners, gold mining stocks in particular doing well, and us being in what I believe is part of a third gold cycle is leading us to think that this could be one of the best places. If we get restagflation, gold could do well. If we get interest rate cuts, gold could do well. If we get an economy that's looking really sick, gold might hold. So that's the thing. Gold is kind of a winner in a lot of these situations, as is silver, and both have been doing very nicely since we first went uber bullish on them at the start of the year. All right, let's move over to KWeb. This is just an interesting one. We saw that dark pool transaction. For now, KWeb has held around this zone. And of course, we want to see a reaction to this. If it does go bullish, that could mark a good sign for Chinese stocks turning around, but it's early days just yet. Another one that I noticed was this closure here. Well, I have to assume it's a closure of the semiconductor market. A huge dark pool transaction, one of the biggest we've had since 2023 in January, just went through. Now, this could be people taking profit after a 7% fall off on semis. We got close to mean reversion, which we'll look at later on, and there is a monster trade that just went through. So the shorts may have just gotten out, or at least some shorts may have just gotten out, and that is worth paying attention to. Secular bull market analogies, we have always looked at this. We believe that we are kind of here at the moment in this market. And look, we will get pullbacks. That's the nature of it. But it looks like there's more to go. And of course, we're hopeful that the bull market will continue into 2025. And we've got Whaley breadth thrust suggesting that, triple 70s. And of course, if the Fed does end up cutting, while they don't cut out of the goodness of their heart, and it ultimately will be a big problem, it can take longer than people expect. So a lot of people are calling for rate cut, it's going to crash. Although in this cycle, we do expect it to be a little bit different. Let's take a look at Wall Street's rotations. Was it incredibly defensive? Was it anything to be scared of? I don't think so. We had KRE, which is regional banks, continuing off their strong deregulation kind of principles. And we also saw one of our favorite sectors at the moment, energy, come through with a nice percentage gain. And also oil bounced off that very important level. A very important move for oil, and it could bode well for energy stocks moving forward. More on that coming up soon. If we look at the last 5 days, boy oh boy, it's amazing to see that KRE is number 1 and ITB Home Builders is number 2. I wouldn't have thought both of those would be number 1 and 2. To me, it seemed to be things like metals, financial, sure, would do well, energy would come through, and we might even see some incredible strength in a couple of other sectors as well. Gold now starting to drop a little bit considering where it was. If you went to a 10 or 15 day average though, it'll be right up there. So some good moves in a lot of the things we expected. And as always, we did expect semiconductors to weaken here regardless of the news. So remember, don't fall into the narratives. Instead, look at the price action. And what I think a lot of traders and investors are going to be looking for is reactions off some of these key zones that we're hitting. And in particular, NVDA. Where does it go? We'll look at the options market in a moment. Now let's pay attention to the S&P though. It of course gapped down on the session and we did end up seeing a negative delta for the day. Whether that really makes that much difference, to be told. We did expect some weakness about 2 weeks after the big read that we had literally 2 weeks ago, which basically said that the market was exhausting. We'll look at that in a moment. And this could be considered an island reversal where it's got a gap up, 2 kind of sessions and a gap down. We're at the first level of support. If it manages to hold here, I would expect some bounce to come through this zone. If it does sell then bounce, that kind of points towards more of a bearish undertone. So it's very important how the market reacts over the next 24 hours. This is the red stop sign I was talking about, basically just told us that the market was starting to get exhausted. We've had a few of these that have had minor pullbacks and some more major pullbacks. And as we mentioned, we kind of thought it might go for 2 weeks because that's what's happened about 2 or 3 of the times, 2 out of the 3 times that we've last seen this. We've seen a 2-week continuation, then a weakness. Will it be like this one? Probably not. However, that is the type of thing that a lot of people will look for. Remember, the average stats are we get 5 to 10% sell-ons a year, and we are now looking at whether this could be it. Let's move over to the futures to look at the action. So we talked about the melt up, this very slow melt up. Now, I personally wouldn't have shorted that because it's a bit guesswork and you need an option generally because otherwise you just keep getting stop hunted the whole way up. But if you did, congrats to you. I think it would have been better to go in even short semis if you were going to do anything because at least they looked weak and big tech stocks looked weak in comparison. What happened though is we bounced back down straight into our anchored VWAP and our demand zone. For buyers, this is going to be where they're going to try to commence. And I'm not sure they're going to be able to hold this level up. I would be surprised to see, I wouldn't be surprised to see a bounce on it, but I would actually probably prefer it does something like this. And the reason is just quite simply, if it does that, then at least it's getting a little bit of the steam off. It's resetting some of those technology stocks to allow for them to move forward during maybe the back end of earnings or the middle end of earnings. And it would be expected at this point. But we do have that demand zone. So all the way back into where you'd expect buyers. And you can see here at the time of recording, they are coming through. Let's have a look at the smaller time frames. It's a very difficult trade. If you're going to go bullish, you'd already have to be bullish, and you'd be bullish on a pullback with stops below this low or this blue line over here. And you'd just be saying, well, you know what? It's been by the dip. I'm going to have a go at it. Not my favorite setup here. I think replication can get better. Let's have a look at the futures market for the S&P and therefore the options. And you'll notice things changed a lot. This is now the 17th in terms of what we expect on the options market. It went into a massive put fest. If we move over here to the 18th, there's puts all the way through 55.60, 5500, this type of level. Now we're currently trading at 55.88. So again, this is going to act as if we do fall off further, you have to think 55.60 is going to be that kind of put wall. So as the market, if the market does fall through that low of 55, kind of 70, then it's probably going to be purchased up, you would think, after that. And then things change a lot leading into the OPEX. We've got calls all over 5,600. So the market may want to stop underneath that. And you're now starting to get this huge put dynamic with call dynamic. We didn't have that earlier on in the week. So some interesting changes here in the markets. We're moving from positive delta now into negative gamma. So basically, if the markets do take 55.60 and fall through it, especially after lunch, that's going to create what we call a negative gamma possible waterfall. And that could cause significant selling through the session. So I think 55.60, mark it on your charts and pay attention to how that level reacts. That's going to be a big one. Let's move over to CTAs. Both S&P CTAs and NASDAQ CTAs were buying. This is 24 hours delayed, so of course that's on the previous session technically. We use CTAs more as a swing or to confirm trends. What about Brent? Well, Brent was down in the previous session. I would expect it though to be up when we next read that in our Friday video, which is of course the Thursday close. Copper CTA, yes, that was down across the board. And we did see copper continue to weaken, and gold is still doing really well. CTA is still buying gold. For the big stocks that you guys like to follow, let's have a look at Tesla to start off with. We're trading just under 250. It's been, sideways action, what we call a pullback in time so far. We'll look at the charts soon, but we don't really want, if you're a Tesla hodler, to get it underneath 240. 240 underneath would be really bad. That would start, of course, a possible negative gamma switch. And you can already see we're kind of in the middle. We're in the neutralized zone. Above 260, really nice for the end of the week. Below 240, bad. Anything in between, I would say it's neutral in terms of stock. And we'll give you some of the trigger levels that we're seeing on the charts soon. What about NVIDIA? Well, NVIDIA has smashed down, and we always expected it to sit between 115, which we've said a lot, and realistically 140. This is our kind of normalized expectation. I'd love to see it hit 109. That would be a great buys level. But you'll notice here that the puts are overwhelmingly stacked on 115, which we've had for quite some time. So will it find a dip buy? It does tend to suggest that, but I think 115, if it falls into that level, could be too much for it. So yeah, 115, a very clear level on the option side. And at the moment, we're in negative gamma. So of course, if it does stay underneath this 120 throughout the next couple of sessions, it could easily push that 115 or even get worse into the 109. And at 109, yeah, that level would be nice. Let's move into the charts and see whether the market's actually freaking out underneath the hood. High yield bonds, often considered junk, they're pretty good, nice and bullish. Another indicator that I like to use, this one here, my custom overall bond indicator, that's still looking neutral to bullish, so I wouldn't say that's bad. And yield uninversion isn't happening at the moment. It's actually bumped up a little bit here. So again, no concerns there. Remember, when it uninverts, we'll be on a timer more in the markets. What about treasuries? They're holding firm, which is expected. I wouldn't trade treasuries, but I still think they'll do well over the next 12 to 18 months. And ITB home builders, and of course KRE, which is regional banks, two of our reads on whether the underlying economy is doing okay. Well, it seems to be doing absolutely fine. So should we be worried about this current dip in markets? No. It's not even really a dip yet. Yes, semis fallen off a lot more, but that's to be expected. And that's because they're jumping 40-50% each time they're actually going on a run. So it's expected to see that. Copper is a little bit worrying. I would have expected to see copper bounce around here. And as I warned in the last video, we've been talking about it, we need a bounce. Of course, we want to see it hold this level. It could be it's even doing something like this. But copper, well, I'm still overall bullish on it in terms of an overall trend concept for the next couple of years, cyclical concept. I am very much paying attention to how this is reacting, and I wouldn't add a trade or anything like that right here, right now. US dollar has fallen, and it's fallen through, and you'll notice here on the daily, it actually closed below my very bearish zone. Weekly close is important here, and it tends to suggest that around the 104 bracket, and I can see the 20 coming down here as well, this is a very heavily traded zone. So the 104 bracket for currency traders could be an interesting point. Something like that certainly could be on the cards. And it looks like the US dollar may continue to weaken on expectations of more rate cuts, plus some other sovereignty questions that people are asking around the world. What about gold? Well, it's doing amazingly well. All-time high, breach to a high, obviously suffering a little bit over the last 24 hours as it's had a big run. It is technically an exhausted run right now, which could mean that we get something like this for a little period as the 20 moving average catches up. But overall, still very bullish on this. And I am still thinking $3,000 for gold over the next 12. Well, I guess it's less than 12 to 16 months now because it used to be 18 months. US oil, big move. fantastic move. Very, very nice. Now, there were some people that were actually trading this long in here. We talked about it in our Market Masters Club, links in the description if you want to come and check it out, and free 7-day trial. And we talked about how here is such an important buy zone if it was going to find it. If you were to end up buying it, you would have bought it around here, which would have been the best position. Stops below here or here, and it absolutely went ballistic throughout the rest of the session, which is great news because I did want to see oil regain control. I think there's a very strong close for it. It suggests to me that we're going to go past 84 a barrel, and we're going to lead into hopefully our next move, which is 86.50 a barrel, and that's going to bring with it what we've long suspected is already a positive movement. Now, this is why you kind of fall into the price action more than the rhetoric, because a lot of people were super negative on oil, but as we saw here, we were bullish on oil, stocks in particular, and we've been rewarded so far. And could they hit an all-time high? Well, they certainly could do a lot better, and the movements into something like a 96 or 98 would be what I'm looking for here in the energy sector. Nice breakout. I want to see the weekly close, of course, come above to get significance. But you got to remember, oil has done a big 61.8 pullback, and this is a great sign, especially if the weekly closes that way. Tesla, on the other hand, for the bulls, you guys need 265 plus close. I think that will trigger in a possible 300 move. And for now, it's sideways action. So you got to remember the 20 moving average is playing up. 240 is where the put wall is. So that's going to be a major kind of level of demand or support in this market. And this is the type of thing you would expect, a pullback in time. What didn't fare so well was, of course, AMD. It hit our first target and got absolutely mauled. So it did give us signs of weakness. We talked about how this would have been a scale back heavy level, and it's, well, would have been broken even the rest of the scale at this point. That is a very bad sell-off. And of course, it happened where you would expect it to happen. So that's why technicals are so good. TP level, if we were to buy into new positions, as I mentioned, I would have wanted it to go through this high up here. And it was actually interesting. One of the things we were looking at in the last session was INTC, Intel. One second. Don't put double I's, guys. Intel there, and there it is. And basically, we were looking at this for a closure breakout. And this is the importance. I just want to bring it up. So hopefully, we can learn from this together. You want to make sure you get that closure up. It didn't do it. See how it came back down? That does not constitute a very healthy break. So let's say you bought it in the previous session at the open because you said, okay, this thing's running. It did run. You could have broken even the trade. But if you were holding it into the close, you may have had to have closed that position because it looked very different. Now, you wanted big volume, sure, but you wanted this thing to close above. And this was one of the stronger semiconductors on the day. But yes, still down overall on the session. Another one that is very different and bucking the trend is Hood. So we got a nice breakout in this, and it's still holding really nicely, even though the rest of the market's fallen down. Hood still looks quite strong on the charts. Let's move over to NVIDIA, new lows. You can see here we got underneath this level. Now, I love 109.50, and I think you guys can see why. We're going to have probably an anchored VWAP, an important one coming with it, and we'll also have a fill of the gap. Now, that's one of my favorite levels on this stock. We're down below the daily 20 moving average, and you might notice that it also would make sense to get here because the 20 weekly would be there as well. So this level for NVIDIA, I would love to see that. 115 and 120 remain, though, the big put walls. So the market could easily just hover around here at 120. If it goes down, 115 could also be a bounce, and then 109.50. I like 109.50 the most, and what I'm particularly looking at is the semiconductor versus SPY chart, which obviously we've been looking for mean reversion for a while. A little bit more to go. Anything in here could do worse. From the top to the bottom now, from semiconductors versus SPY, that's a 10.44% underperformance, and this has been the best area for semis all year, really for over a year. So this has been the consistent mean reversion level, and even before that, you can see on the sell-off here of 22, it was used a lot. So what an important zone. Love to see a reaction here. We will be tracking it together, so stay tuned for that. What about the Chinese market? Well, surprisingly, it's holding okay. Love to see a gap up here to reverse this island reversal negativity. Gap up, movement higher, that would be awesome. We obviously have not seen that yet, so we'll be watching for it. And HSI, come back to that next session. We also saw the US 2K hit its first target, and it overshot it a little bit, and it's come down. And at this point, what we'd be expecting is a nice little bit of consolidation. That would be perfectly normal. If it does keep ripping, maybe it can rip to 2400, but I would like to see a pullback in time here. And that would not be unhealthy for the market, and it would be perfectly normal. But yes, the US 2K, it still looks really bullish on charts, and I wouldn't necessarily be terrified of it just yet. And why is that? Well, the RSP is doing really well. Look at this equal weight, new all-time high, and then, of course, a closure above here would signify that pullback should be met by bull demand. And yeah, everything's looking pretty good from the RSP side. So pullbacks at this stage we'd think are still bullish. Now, what about the NASDAQ? Well, the Qs, of course, have weakened. And you can see here that it's come down close to that first level you would expect, which is right around in here. We're not quite there yet. It's anywhere between 478 and 474 would be where we expect some bulls to maybe try to recommit. And remember, we're not even close to mean reversion, which is usually what you're looking for in these bigger pullbacks of over 5%. Is it normal? Yes. This market is going very strong and it has to pull back. And this is why we pay attention to these overbought indicators. And more importantly, the long shorts. The semis really were the tell here. And it's been telling us to be more broad-based, look at other sectors. That's something we've really been following now for 2 weeks. And I hope that's helped you guys. And for new people, definitely subscribe if you're interested in that type of philosophy on markets. Another one that's doing really well is Bitcoin. Bitcoin's held up. It's doing nicely. And we still think that this is a significant change. A lot of people are still very negative on Bitcoin. And I feel like if it comes down, it could have some really nice turns at either around the 59 or 61K. So 61K or 59K could be both very good bull buy zones on this market. But for now, we obviously thought this was really bullish over here, and it continues to look quite bullish. Even with some exhaustion coming through on the daily, this is the type of thing that you often do want it to do when it's been in consolidation for a while. I'd like to see some more thrusts over the next week in particular. For the news ahead, there's not too much coming on. Basically, we have a bit of monetary policy statements from the Euro, which is, of course, important, but it's not the US. And then we've got the ECB press conference as well. And that's all happening on Thursday at 8:45 New York time. Then on Friday, we've got core retail sales. Really, it's going to be about Thursday earnings, TSM and Netflix. We'll have to be paying attention. Don't fall too much into the news narrative, guys. This whole thing with semiconductors, it was excuse to already sell what they were already selling. We saw it in dark pool liquidity. We saw it in huge trades across the board. And of course, it just made sense on the charts. So I think there's one thing to be doing, and that's always paying attention more to the price action. And remember, our opinions don't mean much. It's what the actual allocation is doing. We want to be price-based action traders, but also position-based traders over the next coming years as AI takes over more on these markets. If you're interested in finding out more about what we do, you can check it out over on X, and of course sign up and also check out some of our courses if you want to know how do we replicate similar trades. Thanks so much. We'll catch you in the next one. Bye for now, guys.